In July, headlines related to the coronavirus pandemic continued to be at the top of mind of investors. The S&P 500 closed 5.6% higher, marking the fourth consecutive month of gains. International stocks gained 4.5%. Continued broad monetary and fiscal stimulus reinforced the market's confidence that the adverse economic consequences from the pandemic will be relatively short-lived. In the U.S., Congress has been negotiating another stimulus package to aid workers affected by the pandemic. While negotiators remain in an impasse on several issues, most believe that a compromise is inevitable. Federal Reserve Chairman Jerome Powell reminded us that the Federal Reserve will use all its available tools to support the economy. Europe's groundbreaking stimulus agreement reached in July added to investor confidence, supporting higher equity values. However, we continue to see serious reasons for concern. Initial estimates of second quarter gross domestic product reported an annualized 32.9% drop. This means that if the U.S. economic output for the entire year was at the same pace as the second quarter, it would be only 2/3 of the first quarter's economic output. This was the largest decline ever recorded since the U.S. government began reporting quarterly economic data in 1947. Further, it was much larger than the previous largest decline of nearly 10% in 1958. Analysts expect that the quarterly corporate earnings for the second quarter will drop about 32%. In addition, a recent surge in COVID cases in certain areas of the U.S. and world have forced governments to reverse course in reopening, which will certainly continue to adversely affect economic recovery. Of course, we are all anxiously awaiting the trial results regarding the efficacy of COVID-19 vaccines. Currently, there are 5 candidates set to begin phase 3 trials, which is certainly a positive sign. Finally, the July jobs report showed continued improvement in the employment conditions, though slightly more than 10% of Americans remain out of work. Our chart of the month shows the growth in the market cap of certain technology stocks in the S&P 500. They are often referred to as the FAM companies. That's Facebook, Amazon, Apple, Alphabet, which is the parent of Google, and Microsoft. As you can see, these companies have been on a steady climb, now comprising 24% of the index. This has led to questions regarding their growing market power and competitive behavior. In fact, most recently, their CEOs were asked to testify before Congress to address these issues. To read how these trends affected July fund performance, please read our monthly investment report, which is now available on our website.